Cellos! Julenn Keeling here, Associate Broker with Berkshire Hathaway Home Services Town Realty, located right on the coast in beautiful Hampton Roads, Virginia. Welcome to Chapter 116 in my first time home buying series, and today I'm going to discuss what is the difference between your down payment and your closing costs. Be sure to stay tuned to the end as I will have some bonus tips on how you can save some money on your down payment as well as your closing costs. As I'm always presenting you with options and producing results, let's jump right in. Your down payment will vary according to whatever your specific financial situation is and the specific type of loan it is that you're going to be getting. Different loans will require different amounts for their down payment. The down payment is simply the amount that you will be putting down at closing that goes directly towards your principal balance or the total amount that will be owed for the loan. For example, let's say that you're buying a house that is $100,000 and you have a 5% down payment requirement at closing. That would mean that you would need $5,000 and your principal balance after closing would be $95,000. One thing to note is that the lender is going to ask you where you're getting your down payment funds from. Some acceptable examples of where could be from your checking or savings account, 401k or retirement accounts, as well as a gift from your parents or a family member. Just keep in mind that these funds will need to be sourced, aka no mattress money. Bonus tip. As a first-time home buyer, there are sometimes grant funds that are available to you that you would be able to utilize for your down payment requirements. Be sure to ask your lender if you would maybe qualify for any of these grant funds because it's free money if you do. Bonus tip 2 for down payment. There are still 100% financing options in which no down payments are needed, especially if you're buying in the state of Virginia. Be sure to check out the description below and I'll put a link for a few videos that go over some of your down payment financing options as well as some of the 100% programs too. Now moving towards your closing costs, these will also vary according to whatever type of loan it is that you have. But for the most part, they're really going to be determined by however much the sales price is. If you're buying at about the $120,000 mark or below, I would suggest budgeting about 5% of the sales price for your closing costs. If you're over that mark of about $120,000, I would suggest budgeting about 3 to 3.5% of the sales price. For that same purchase scenario of the house being $100,000 and your closing costs are 3.5%, that would mean that your closing costs for this $100,000 house would be $3,500. Your closing costs do not go towards your principal balance, and these are basically the general costs that are associated with purchasing a home. To bring our example full circle, so that same $100,000 purchase price, if you needed a down payment of 5% and then an additional 3.5% for closing, that would mean that you would need a total of $8,500 in out-of-pocket cash in order to be able to close. Bonus tip. Did you know that the seller can actually pay your closing costs for you? Yes, that's correct. You heard me right. The seller can actually pay some or all of your closing costs for you. Keep in mind that some loan types will actually cap how much the sellers are able to contribute towards your closing costs. But for the most part, in our area, if you make a reasonable offer to the seller, then you can get most, if not all of your closing costs paid. For instance, it may be more advantageous for you to offer the seller full price, but ask for all of your closing costs back in the way of a seller concession. This would be less money that you would have to come up with out of pocket in order to be able to close, and it really doesn't change your mortgage payment that much. For every $1,000 that you finance, it only changes your mortgage payment of somewhere between $3 and $10 per month because the rates are so low. I personally have always been an advocate for keeping as much liquid cash as you can on hand just in case you may need it for a rainy day, especially when you're buying your first home, because there will always be little this and that type of expenses that you will need those funds for. And now for my super great bonus tip for you. If you're buying in Virginia as a first-time home buyer, you can utilize the VHDA loan, which is over 100% financing and the grant funds together. Be sure to check out my VHDA video, and I'll put a link in the description below that goes more in depth on how to do just that. The VHDA loan program and grant funds is a super great combination for first-time home buyers to utilize, and I highly recommend it. I hope that you have enjoyed the content and learned a little something along the way, as my goal is to always educate my first-time home buyers throughout the home buying process. Please give me a thumbs up and share with a friend or family member that you think may find the info helpful. Also, feel free to comment below with any questions that you may have. Thank you again for watching, and I look forward to connecting with you again soon. Bye!